Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate and Business Podcast. It is November 10th, 2021, coming to the end of the year. With us today, we have Mr. John Kolb, top 1% of all originators in these United States. Go ahead, Mr. John. How are you?
Hey, guys. How you doing today? Happy Wednesday.
And we also have us, and good morning, John. With us today is Mr. Harvey Freed, the host with the most, the Hardcore Mortgage Real Estate Business Show on the air going on 23 years, 97.1 FM, heard every Saturday morning from 9 to 10. Good morning, Harvey.
Good morning, gentlemen.
Good morning, Harvey. And listen, guys, we have to acknowledge this. Tomorrow is Veterans Day, and we want to thank all of our veterans. Of course, all the markets are going to be closed tomorrow in honor of this special day. And we're extremely active in VA lending in the community and appreciate the service to our country by all of our service members, past and present. John, I know that you have family members that served our country.
Yep. Oh, yeah. It's my grandfather was part of World War II and actually looking at his medals and a lot of his stuff right now. So it's a great day to celebrate and acknowledge the individuals that have sacrificed for us.
Yeah, I know it means something special to you. And I was with you in your office when you got a letter, recognizing the fact that your grandfather served our country. He was a well-decorated veteran of World War II, and it's something that you and your family are very proud of, John. So a salute to you and your family and a salute to your grandfather. We appreciate that. I also have family members in the armed services currently active, and my daughter is married to a captain in the Army. He is serving our country not only in the reserves, but there are certain things I can't talk about, John, because when you're serving our country, there's just certain things you can talk about. But we're very proud of Nicholas Spearworth. We're proud of his grandfather, who served in two wars, the World War II and the Korean conflict, and my son-in-law's uncles and aunts and cousins have all served and are currently serving our country. So a shout out to them and everybody who has served. So you see, it means a lot to a lot of people, and we want to thank them and honor them, and we will certainly be honoring them tomorrow. Let's get into a couple things right now. A couple things that we want to talk about today, November 10th, 2021. What are we doing with regard to home prices, John and Harvey? And I'm going to start with Harvey. Harvey, right now, home prices continue to rise much faster than personal income. Historically high home prices could be shutting out some would-be home buyers. The market's hot. We talk about that all the time. But what we don't talk about is, Harvey, in our opinion, in your opinion, I don't know what you're seeing with your buyers, the higher these prices go, maybe some people are going to be shut out of the home buying market, Harvey.
Yeah, here we also see it on the rental side. Is rents in the last 3 years since COVID, really even about a little before COVID kicked in, rents are up 24%. Home appreciation is skyrocketing. Lack of inventory continues to drive up the price of homes. And here you mentioned the kicker is where income is only going up at 4%. Some families definitely are looking to consolidate, figure out a way where they're going to qualify and try to save as much money as they can to outbid the other person to get that house. Home ownership still way less expensive than renting. And if you can reach out to your lender or us here at Capital Mortgage, we can show you some special programs and some additional mortgages, 3% down conventional programs, FHA programs, and some other things that would really help you get into a home. That's why we urge you to reach out to professionals that have been in the industry for a long time, because experience really does help when you're trying to navigate a home purchase in today's market.
Yeah, John, the other side of the coin is, and it's really positive news. Yes, home prices are going up, but there are more first-time homebuyer programs, and interest rates have stayed very, very low. So while the fact that home prices are going up, there are more first-time homebuyer programs. There's lower down payment programs. Interest rates are lower, so it means it's more affordable. John, what do you think?
Well, I mean, there's a catch-22 to all that, right? Everything has got to move on the same scale in order for everything to still work for each other, right? So if we've got the sale prices going up, and you're talking about first-time home buyer prices. Well, the first-time home buyer prices are capped at a certain income level. And if you're above that certain income level, then you don't qualify for that first-time 3% down home buyer program. Now we have others that don't give you as good of benefits, but they're out there. But what I'm saying is that if the prices are going to go up, your DTIs are going to go up, your income hopefully goes up, and the income levels that they allow us to qualify these people under should go up, so that we can, move everything along into that higher price bracket that we're kind of pushing towards. And it's one of those things where it's, the prices go up first, and then we got to wait for all the regulations to catch up, which we all know can take a long time.
Yeah, Harvey, at the same time, home ownership still is a key way to build wealth for people. Appreciation, having your own place. I mean, we know that if you buy a house today, chances are in 10, 15 years, if you're looking to trade up, that house is going to be worth more. You're building wealth through the equity in the house. You're building wealth, your own wealth, rather than paying rent. So at the same time, we could say historically high home prices, we're going to see them go up. But at the same time, home ownership still is the best way for people to build wealth.
Americans spend a lot of money on credit card debts, Harry. There's no doubt. We're on a want. We always want a little bit more here. They want to go out and buy that camper, that RV. We want to go out and buy that boat and go on a family vacation. It's been really nice to see the appreciation has really helped a lot of families now use the cash out refinance to consolidate some of the debt they've got themselves into. Harry, the appreciation has been fantastic. As you mentioned, home ownership is a great pathway to wealth. And it's been proven in the statistics show that families that are homeowners typically are wealthier. They're able to save more money. They have pride of home ownership. They're outside fixing their yards up and making their home more presentable. There's a lot of DIY out there, doing it yourself. Families that are able to really dress up their homes, whether it be finishing a basement, redoing a bathroom, fixing the landscape, doing these projects that continue to add value in their homes, so that as we send an appraiser out to the house, these homes are the nicer homes in the area. And again, there's a sense of pride in home ownership that's truly helped many families. You wrote it in your our topics for today, Harry. Cash out refinance transactions are up over 33% from last year. That's huge.
That's right. So before we get into that, John Kolb, this podcast is brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number. We have to get in that for the lawyers and all the legal people, compliance and all that, because we are extremely compliant. How about this, John Kolb? With home prices rising, okay, home prices are rising, appreciation has been rising. It's been kind of a seller's market, not kind of, it has been a seller's market. We have it documented from 2012 now through October 2021. That's a long time, okay? But there are naysayers out there, John and Harvey, starting out with you, John, in terms of the naysayers are saying, listen, home prices were rapidly increasing from 2002 to 2005. That's a third of the time that they increased now. They were increasing then at an insane rate in a shorter period of time. So the naysayers are asking this question because they're always looking at the downside. Are we ripe for a possible housing recession?
No, and I want everyone out there who's listening to know that I am not a naysayer in that. I do not think that we're going to have a crazy bust in this bubble. Now, will the bubble come to an end where things become more stagnant and we get normal appreciation? Absolutely, but we're not going to have a bust at like we did in 2008 to 2010, because there's more regulations in place. There's more help out there to try to make sure that homeowners are able to stay in their home. There's forbearance. There's Harry's favorite F word. There's deferments.
Ooh.
There's just a ton of different programs out there to help people stay in their homes. In 2008 to 2010, the banks weren't ready. They didn't know how to react. They put these loss mitigation departments into play. And the only way that the loss mitigation departments could hold their jobs was to tell people to stop making their mortgage payment, which is the worst advice ever. Bad.
Right.
So, hey, now we've got all these different programs in place. Every mortgage company is reaching out to head off anything that might be a problem. Look what happened at the beginning of COVID. Forbearances were available left, right, even if you didn't want them. And that is just a testament to being prepped and ready for another burst. And I don't see it happening. It'll slow down, kind of, like the rest of us slow down over time. But it's not gonna bust.
Well, also, John and Harvey, and I'm going to go to you on this, Harvey. That was really a perfect storm back then. We are seeing right now an increasing jobs market, not a decreasing jobs market. So that was a situation going that then there was a decreasing jobs market. We saw a huge depreciation in home prices back then. We're not seeing that now. And there was just a perfect storm. So I concur with you and Harvey. What we're seeing right now is we're still seeing that lack of inventory on the market right now, which will continue to provide a strong purchase market.
Yeah, there'll be probably a substantial decrease in home appreciation. These records, 24-25% home appreciation is a little bit rambunctious. And again, we've talked about it, pricing some of the families out of the marketplace, especially if they're trying to go from a rental situation. Interesting enough, Fannie Mae has home projection appreciation for next year at 7.4%, which is still humongous. It's a large number, but Goldman Sachs has it up to 16%, and CoreLogic on the conservative side, just under 2%. So I think somewhere in there, I think Fannie Mae's got it pretty much penciled in, somewhere where we should see home prices appreciation in 2022 at about 7.4, in between 7 and 8%, which really leads us to this winter, another great opportunity to maybe buy that house. If you're ready to, if you've got your mortgage all set up, if you qualify, if you know you've got your income, if your job's stable, you are very ready to become a homeowner here in the community. And maybe this winter gives you a small window of opportunity before home prices increase next spring.
Yeah, that's perfect advice for people. We're taking a look at it around here, and all our realtor partners are telling us that there's still a lack of what they would say quality inventory. And when you see a lack of quality inventory, you know, with the plethora of buyers that are out there, that it's going to be a very, very strong purchase year coming up again in 2022. Moving over to the refinance transaction side, we have that as an agenda item today and a show topic, John Kolb. We have said this for months, okay? What are you waiting for? Rates aren't going to zero. Rates are still down. Finally, people have been listening. They should act now. As Harvey directly mentioned in Mortgage News Daily, it came out that cash out refinance transactions are up over 33% from this time last year. John, what are your thoughts on that? Finally, right?
Well, hey, we knew that this was going to happen, right? We've been talking about it, preaching about it for how long, Harry? Months and months and months and months. And rates are up a little bit, refinances are down a little bit, purchases are up a little. It's give and take. We're in a market where things are going to fluctuate based upon what the Fed does, who sneezes behind the scenes, and in what's going on in our outside local climate, right? And we have seen a change in our area where home prices and home purchasing happens more during the winter months than it used to, and that's a great thing. That's a testament to great realtors out there, people still wanting to be moving and upgrading their homes. So it's what we've always talked about over all the years and all the months of doing this, letting everyone know that things are going to change and things are on the rise.
Yeah, and Harvey, cash out refinance transaction. Again, I said people are listening. It's well documented. We preach it. Finally, we have, we like to be on the cutting edge, and we just spot the trends that happen here. If it's happening here, it's happening all over. I'm not going to tell you, we don't invent anything. We are market. We depend on the market, like John said. Cash out refinance transactions, Harvey Freed. Pay off those credit cards. Do your home improvements. Harvey, your favorite topic. Maybe put in that pool, right? But look what's happening. People are doing it, right, Harvey? People
Yeah,
are doing it.
Yeah, you got to live you got to live, and it's a lot of fun to be a homeowner. And whatever your heart desires, we're not here to tell people where to spend their money, but definitely would like to get your debts consolidated. If you already have a home equity loan out there, those interest rates are going to go up. These short-term interest rates on items like that will go up. Credit cards could possibly continue to go up. So first, we like to see a family consolidate their mortgages if they have more than one, maybe a home equity loan. Then next, consider the fact by knocking off some years, and also, of course, allowing yourself to remove the mortgage insurance, whether it be PMI on a conventional loan or MIP. So these opportunities are there for families. When they call us a year or two later, we're always, it's typically an answer of a loan officer. We're like, wow, why did you wait so long here? You know, we see families here with 7 to 10 credit cards, and boy, stamps are almost 50 cents. They're just wasting $4 or $5 months on the stamps. So it is really nice to see any time a family can really get serious about debt consolidation and using that home equity that we're blessed to have now in the house to go ahead and put themselves in a better position.
Yeah, Harvey, over 30 years in mortgage banking, we have a servant attitude for our clients. We've saved hundreds of thousands of families, millions of dollars over 30 years, and we'll continue to do so. We will always act in the best interest of our client. If it makes sense, we'll tell you. If it doesn't make sense, we'll tell you. Whatever is best for you, we're going to let you know, and we're going to give you our objective viewpoint. Mr. John Kolb, miscellaneous. We have a special guest on our show on 97.1 FM, 9 to 10 this week. Who do we have coming on, John?
We've got Renee Lacia Acho from Keller Williams Domain going to be joining us. Very excited about this one. She is such an expert in her field, in our area, and we're making it classy, San Diego.
Yeah, there you go. And John, you've known her family for a number of years, haven't you?
Well, growing up in the Southeast Michigan area, in our neck of the woods, there's so many high schools that are within miles of each other. So yes, we've known each other a long time, or our families, have known friends of friends, families of families, and just getting to know everybody. That's unfortunately how long I've known Harvey, because of his younger brother. It's been since I was 13, and that's why I've got gray hair, and that's why he's bald. So it's just one of those things where we keep the connections, we make the connections again, and we always try to do the right thing so those connections never go stale.
Yeah, I thought it was very interesting in meeting with Renee last week that her background, being very advisory and conciliatory, she started out as a school teacher. Yep. And I found that when you're a school teacher and then you move into real estate, you're still teaching and you're learning and you're giving great advice, and you're really counseling and advising your client base. And with all the phenomenal connections that Renee has and that you have, John, in our community, this should be a wonderful show, Harvey Freed on 97.1. I'm anxious to be there. I know, John, you're going to be doing the show remotely with Renee, and she's going to be doing it remotely as well. Harvey and I will probably be in the studio conducting that. But Harvey, the shows have been great. I mean, the shows have been wonderful. We've had a long run on the show. What we try to do is bring consumer advocacy advice and really champion, Harvey Freed, the rights of the consumer in our area.
Harry, people have an opportunity to reach out and really build their financial team. We always talked about financial literacy. Just like when you're buying a house, we really think it's imperative that families reach out and find the experienced people that can discuss all sorts of facets of the house, not just open up the door and obviously point out where the kitchen and the different rooms are, but take things a step further by having a strong home inspection team, by having strong real estate connections that really know the areas and can give lots of details about things. If you're buying a house, does that house have some lake privileges or beach privileges, and what the details are on that? Also, Harry, living in the Midwest, the weather really tears up our roofs. It tears up our roads. And we've seen so many homeowners associations that aren't in good financial shape, that haven't taken care of their business. And it's important to find out, if you're buying a house, what future costs you might have, or what things the associations are talking about to improve the properties. And this goes whether you're buying a condominium or a home. And Harry, if I could just maybe finish that whole concept, is by calling and maybe interviewing a few of the top people, you quickly understand what the differences are. And we urge families to, again, reach out to us, Capital Mortgage Funding here, where you're going to deal with some little additional experience, which we think can really benefit you as you're navigating a new home purchase.
Yeah, I appreciate that, Harvey. Those are great last words. Easy for me to say from you for today. And I think it's always a compliment, John Kolb, and I'll let you get your last word in. When somebody calls you up and says, hey, Harry, I was given your company's name. I was given your name because you guys have been around a long time. What do you think I should do? And then, John, we go ahead and we ask all the pertinent questions, get the background, because when somebody is looking for advice, we want to put them in the best position for themselves.
Yeah, I mean, there's nothing better than getting a referral from somebody that you know and that you love. And being able to take care of them the right way and give them the right information is what we need to do. We take great pride in getting the people that we know in our area, and we want to make sure that we keep it that way because they know when they can reach out to us, we're going to give them the best advice, the honest advice. And if there's something we can or cannot do, we'll let them know right away. And that's just part of our culture and how we go about doing business over the last 30 years, going on 30 years. When will it be 30 years, Harry?
Well, our company was formed in May of 1992. So we're looking at our 30-year corporate anniversary in May of 1992, John. We'll be hanging another banner outside the building signifying 30 years. And it's just an honor and a pleasure to serve the community. Listen, never wanted to do anything other than take care of our clients and get the referrals from their family, friends, and everybody involved. So like I said, it's an honor to serve. And I'm going to leave it at that. Veterans Day tomorrow. There's no ultimate service than what a veteran does for our country. And I'm proud that, John, your family has served. My extended family has served. And we continue in our own little way to go ahead and try to make an impact on our community and give the proper advice and give people the options and set them up for success. And, signing off for, I want everybody to tune in the show. Got to listen to Harvey on 97.1 from 9 to 10 every Saturday morning. This week, we have John Cole, Becky Alley, Harry Glanz, Harvey Freed with Renee Atcho from Keller Williams Domain in Birmingham. John's going to be bringing her on. We're going to have a great hour segment with her. Looking forward to everything that she has to bring onto our show. It's a great relationship. And Southeastern Michigan is a very strong market. Renee's going to talk about that, joined by all of us. But remember, everybody, tomorrow is Veterans Day. The markets are closed to honor our veterans, past and present vets. And with that, I want to thank everybody for tuning in. Appreciate all of you. We'll see you next time. But tune into the show, 97.1 FM, Hardcore Mortgage Real Estate Business Show this Saturday, 9 to 10, and we'll see you soon.